CA Rudramurthy, I beg your pardon, sorry, Rudra, about that, to talk about the markets and which is the way the markets are headed from here on. Rudra, given the fact that the markets are slipping, it actually warranted me my slip of tongue as well. But given the fact, where do you see the markets now halting this sort of a move? Where do you see a support and resistance for Nifty now?
Very good afternoon and thanks for having me in the show. In fact, last time when I spoke with Saumit on the same markets at noon show, I was very clear Nifty was at 24,750 where I said we will see 3 to 5% kind of a correction and Nifty will come to 24,000. That was 750 points away from the levels which it was, and even Bank Nifty, I was looking for targets of around 50,000 to come. Now we have already seen that 5% kind of a correction from where I spoke on Nifty and Bank Nifty. But let me be very clear, markets have broken crucial short-term support which was at 23,800, and having slipped below 23,800 yesterday and markets continuing its downward move, now yes, around 23,400, 300 we might find some short-term support. From those oversold zone, yes, market will attempt a bounce, and that bounce can come to 24,000, 24,200, and again market will slip on the downside. So I am very clear, this is a sell on rise market. Current levels we are highly oversold and we might expect some amount of bounce for next week. But post that bounce again at higher levels, market will see some amount of selling, and that is still good for a market which has already seen a gigantic move in this year itself, and we have already corrected around 2,500 points plus on Nifty, and Bank Nifty has also corrected handfully. And very important is you are only seeing 10% correction in index, but see a lot of mid and small cap and broader market, people were simply buying all the shipping stocks. They were buying a lot of stocks of railways, defense stocks, valuation no one even thought of. And all these guys who were simply buying left, right, center, ignoring valuation, have seen already 30 to 50% kind of a correction in their portfolio. So yes, at this moment, buy stocks where you have good results, buy stocks where you have valuation comfort, and also be very clear, still some more amount of froth has to be removed from the market in general. I don't see bottom for a medium to longer time frame having get formed, but however for short term, a bounce to levels closer to 24,000, 24,200 cannot be ignored, and from there again market will see some amount of selling again.
So as you're saying that it's a sell on rise market, then what should investors do? Should they continue to stay away from the market for some time more, or is there any counter, any sector that you find is something that one should start accumulating at current levels?
Saumit, great question, and let me be very crystal clear to these investors who are there long term. You have to buy whenever there is froth and whenever there is this kind of bloodshed in market, and then only you will make money for the next 2 years, 3 years kind of a time frame. Short term trading is different, investing is different. So for investors, answering your question, I will tell them, you be very stock specific and you be very sector specific. And let me give you the answer very clear. According to my experience of over 2 decades in market and with my research, I feel IT is one sector where you can still buy a lot of stocks where results were good and still market were punishing them. Look at Vipro, for example. For me, stock at current levels of around 570 is a mouth-watering buy. I won't be surprised to see 800 rupees on Vipro to come within 1 to 2 years, which is a return of 40-50%. And irrespective of market, yes, IT will be one sector where I will be looking at buying opportunity. And on every fall, I will buy stocks like, for example, Vipro. Tech Mahindra also came with fabulous results, and you are getting that stock at whatever current price or even dips to 5-10% from current market price. Tech Mahindra will become attractive. So in general, for me, IT looks very good. And second, look at PSU Bank. Every stock which has come out with results from PSU Bank, let it be either SBI or let it be Canara Bank, PNB, all of them have come out with good results. So for me, PSU Bank, especially the names, whatever I told, looks very, very attractive. And even private banks, valuation comfort is still there. Look at HDFC Bank and ICICI Bank, two private banks which you can buy at current level. And for me, OMCs looks very, very attractive at current market price because crude oil prices are coming down, and I won't be surprised if crude breaks $70, which is a very strong support. It will come down to $60-62 per barrel, and OMCs will be the biggest beneficiary. Look at Hindustan Petroleum looks very, very attractive at current price of around 370-375, and be very, very sector specific and stock specific. Some names like, for example, Indus Tower at 315-320 looks very attractive to me. Look at Federal Bank, 195-200 levels, results were fabulous, looks very attractive. So you have to be sector specific, stock specific, buy where results were good and those stocks have also got beaten down, and buy stocks where you have valuation comfort. And I've given enough names and examples to you and your viewers.
Right, sir. And when it comes to the auto space, how are you? How are the auto stocks looking like on charts? Because
Soumit, I'm very crystal clear on my view. I will avoid autos because of valuation concerns. And I know, yes, Tata Motors has corrected already from those 1,150 levels. You have seen Tata Motor even coming below 800 if I am not wrong. And I won't be surprised, still you might see some more correction in these stocks. The same thing happens with even your other stocks, like whether it is HR Motors, Maruti, all of these stocks have corrected enough. I will still not venture into any buying in autos in general. I will wait for some more correction, which can be another 10% from current level, and might be Tata Motor at around 700 zones, might be Maruti even after another 10-15% kind of a correction from current level, might be stocks like Escort, which is very good for me. Another 5-10% kind of a correction from here. Ashok Leyland might be levels closer to 220, might look good. But at current market price, I will avoid auto. Some more correction can be seen. I will avoid FMCG. Some more correction can be seen. I will be very sector specific and stock specific. And just repeating this for the benefit of your viewers, look at IT in general as a sector. Look at banks, both PSU as well as private banks, and the names whatever I have mentioned. And also look at stock specific where results were good, but still the stock has got beaten down. And the names I have already given. Already, if you see PSU banks, private banks, except Indus India Bank, all the banks, both private and public banks, gave good results. But because of bad market, everything has got beaten down.
Right.
So now you have to buy these stocks where you have comfort in terms of valuation. Results were good. You have to cherry pick them. And names as I have given, look at SBI, look at Canara Bank, look at PNB, look at HDFC Bank, ICICI Bank. And in OMCs, I told Hindustan Petroleum, Indus Tower. And you have to look at IT like Vipro, Tech Mahindra, and you have to stay with real good sectors and real good stocks with result and valuation comfort.
Absolutely. So there are a lot of stocks that actually one can watch out for. If you are worried that maybe you cannot actually go ahead and catch the falling knife, Rudra has given you a couple of names that you can look out for. But yes, avoid FMCG and auto is his call at this point in time. Thank you so much, Rudra, for joining us on the show and giving us your picks. But let's move on and let's talk about the stocks that are actually...
If you like this video, then like, share and subscribe to ET Now.